Okay, welcome today. My name is Jim Pamplin with DREIA Street Talk. Our guest is Stephen Henriquez, CPA. He is the CPA for DREIA and Viju's companies, my companies, and a lot of other people that we know. We invited him here today to talk to us briefly about the Payroll Protection Program. So, Stephen, give us a quick rundown on what your business does specifically for real estate investors.
Sure. Well, good afternoon. Thanks for having me, Jim. Appreciate it. Well, we kind of like to put ourselves out as a one-stop shop for your back office. The idea being, our clients got into business to take care of real estate or whatever that is, not to do bookkeeping and accounting work. So that's where we come in. So we do various services, whether it's bookkeeping, monthly reporting, payroll services, obviously sales taxes, corporate filings, personal filings, that sort of thing. Anything in the financial realm for a small business that's needed, we can provide those services.
So I assume we, like many of your clients, got a PPP, a Payroll Protection Program loan. And I recently attended a webinar about the PPP forgiveness because the bank told me they're going to send the application very soon. It was clearly all above my pay grade. The guy just went on, and when he got to FTEs, full-time equivalents, I was ready to pitch myself out the window. I just lost all consciousness. So take us through really quickly sort of the time span we're in and why FTEs, full-time equivalents, are important in the forgiveness setting.
Sure. Well, just to step back, remember the PPP, the whole point of this was to keep people employed. With everything that went on with the shutdowns across the country, businesses were shutting down and the government didn't want everyone to lose their job and go filing for unemployment, that sort of thing. So that's what the PPP is for. So the goal is to keep people employed. So the government will forgive your PPP if you kept people employed. And that's where the full-time equivalent test comes in to kind of verify that you did what the program was meant to do, is to keep people employed. So, so there's various tests of how you calculate that. Basically, the government gives you a baseline that you then use to compare, your baseline FTE to what you had during your covered period, your period of the PPP that you're trying to get forgiveness for.
Right.
The baseline, and you get, the bottom line is the government's trying to do everything it can to try to avoid having to give money, you having to give any money back. And that's with the extended deadline and everything else that they're doing. You can see that's their goal.
So if I had two people working almost full-time, like they're scheduled full-time, but they get 38 hours, 41 hours, whatever, on February 15th, and then I use all my money and the same two people are working, am I good, even if they're within a few hours?
Yeah, you're pretty much good. As long as with the way it's calculated, it's based on a 40-hour average. So you could have 39 one week, 41 the other, that sort of thing.
Yeah.
But it's based on that average. And like I said, there's two base periods. You can use your base period could be from the February 15th, 2019 to June 30th, 2019 period. Or you could use one from January 1st, 2020 to 2/29, 2020. So you get those two. Obviously, whichever you calculate those two, whichever one comes out to the lower FTE, that's the one you're going to use for your base.
I see.
The lower hurdle to surpass, obviously.
Okay.
And once you do that, then you compare to what you have now in your covered period, and that's where you determine. You want to make sure you're at least there or more in your FTE, so you don't have any. You don't get a reduction in your forgiveness of your PPP loan.
So it's in terms of actual dollars paid, not necessarily hours.
No, it's on hours, not dollars.
Is it?
It's on hours.
Okay.
So now there's a whole nother thing regarding, if you reduce people's pay or whatnot, that's a whole nother discussion. On the FTEs, it's strictly on the number of hours. And to make it simple, they've given you an option of where if you have someone that works an average of 40 hours, you count them as a 1. If you have anyone that works less than 40 hours on average, you just count them as 0.5. And you would just do that math for the two base periods and again, figure out which one comes up to the lower number and then do the same math for the covered period of your PPP loan to see where you come up.
Okay.
Now
So,
the other,
yeah, go
I'm
ahead.
sorry, just the other option of instead of using that point 0.5 for all your part-time people, your less than 40-hour people, the other option is to actually do the calculation and say, oh, this person worked an average of 35 hours divided by 40, that's my percentage. So that's the decimal that I would use.
Oh, you can
Um,
actually use a decimal.
yeah, you would use that decimal instead of point 0.5, you would use 0.9 or whatever that number is. But again, you're comparing that base period to the recovered period. So even so, those two methodologies could come out. I can give you various instances where one methodology would be a better use than another. So the idea is to do both, use the point 0.5 version and do the actual calculation as well, and then do that and see what numbers you come up with.
All right. So that answers why you're going to help me with mine. Okay.
Yes, correct.
Okay. I really appreciate that explanation, and I know there's a lot more to it. So, are there things we don't know about yet? I mean, when do I will finish using my money like next week?
Mhm.
Do I have to wait now till December 31st to apply for forgiveness?
No, the short answer is no, but there's a caveat. Like everything else, there's always a caveat. There's a couple things. One is there's some safe harbor. Going back to the FTE questions, some safe harbor exemptions so that somebody, if you fired somebody for cause, they left voluntarily,
Right.
and a few other things that the FTE won't count against you for not having that person anymore.
I see.
um, and also, there's also a safe harbor if somebody does leave, but you replace them by December 31st. Now, going to your question, hey, I could do it beforehand, and the answer is yes, you can apply for your
Right.
forgiveness beforehand. I am recommending to most of my clients that they do not, only because let's say like in your situation, you said, oh, I'm going to be done next week, and you apply for your forgiveness, but then we know this process is going to take a few months for
Right.
the banks to go through it, then the SBA has to approve it. So my concern is you might apply today, and then let's say 2 months from now you fire someone, and the SBA goes back and looks at you and says, oh, that person's not there anymore,
Uh,
and it's not clear if that's going to be an issue or not. So that's one thing. And the other thing is, to be quite honest, with everything that's been happening, and there's even some discussion uh, in Congress right now, things have been getting, quote unquote, I want to say better. If you think about it, every time they come out with some new rules, they extend the period, they give you some more safe harbors. So every time they change something, it's normally for the better, makes things easier for the user. So some of the things in Congress right now, at least they're talking about it. Who knows what's going to actually come out? If anything, for example, one of the ideas is anybody who has a PPP under 100,000 automatic forgiveness. That,
I see.
you know.
I see.
So my thing is to say, hey, there's no rush. The money's not gonna. There, no one's gonna take the money away from you. I'd say let's wait this out, see what else changes. Maybe more things change in your, to make things easier for you, for your business. So I'm an advocate of waiting this out as long as possible.
All right. Well,
That's
that's very, very good advice. I mean, of course, you don't want to do all this during tax season, but whatever.
yeah.
So I won't take any more of your time today, but I want to know, is there anything else lurking out there that we don't know about?
Oh, there's a few things. One of them is, like you mentioned, tax season next year. Taxes. A lot of people, the big publicity when the PPP came out is, oh, it'll be forgiven, tax free. You don't have to pay tax on this. But then somewhere around mid-May, what also came out, which didn't get a lot of press because it's not as sexy, and a lot of people didn't talk about it. I mean, the accountants talked about it. We thought because that's what we do. But there's also the expense side of things people aren't thinking about. You're thinking about the income side, but you didn't think about the expense side. And so when you're looking at your numbers today, you might think, oh, my number is going to be this, my taxes are going to be X. That may not be the case with the PPP. Something to think about.
Okay. So, I want to continue that, but this form is another place. So, our main meeting is Wednesday evening, August 19th. Okay, August 19th,
Yeah.
Wednesday evening, 7 o'clock. I wonder if you'd come back and talk about the tax aspect Because
Mhm.
what I'm hearing you say between the lines is we might owe tax on this money. So I want to hear the full thing. And we kind of, for the broader audience,
Mhm.
can do a little more. Would you do that for me?
I'd be happy to.
All right. All right. Stephen Henriquez, thank you very, very much. And we'll sign off for now.
Thank you, Jim. Thank you, everyone.